Hi, Chad. Can we just get your consent to record this?
Yeah, you can go ahead and record this.
Okay, great. And why don't you go ahead?
Okay, well, thank you very much for having me. I'll try to be concise. Definitely let me know if questions come up as I go, but I've typically found there's like a good order to kind of go through some of this information. Excuse me. Hopefully it makes a lot of sense. So let me start by saying I'm with Care.com. Specifically, I'm with HomePay, which is a part of Care.com that does the payroll and tax management for household employers. So we're a specialized payroll service. The idea is anybody who hires someone who's going to work for their household, if you pay them over a couple $1,000s a year, then the money you're paying that individual is taxable. If you paid them less than a couple $1,000s, the IRS thinks of it as basically a date night babysitter. You don't really have to do taxes on those wages. But if you pay more than a couple $1,000s, 2,200 to be specific, then that you're crossing a threshold and you've got to do taxes on that. I've worked with a lot of families that have set up nanny shares in the past, and in particular, in the last couple of weeks, we've set up many families doing similar things to what you guys are doing with these learning pods, having multiple families setting up like a tutor / childcare provider. It's still, we've done a lot of research. It still falls into the category of being like a household employee. So one of the things that people always start with is, if we were to do this, is there a way to set everybody up as like one account and have just one employer paying the employee? I wish the answer to that was yes, but the IRS is very clear. Each family in this situation is seen as their own standalone employer. So in order to do this correctly, each family has to issue their own pay stubs, issue their own tax payments to the state and IRS quarterly, and then ultimately each family gives the employee a W-2 at the end of the year. So, you know, if you have 8 families in this arrangement, the employee's going to get 8 W-2s at the end of the year, which seems weird, but this is called co-employment. And at the end of the year, at the same time we would send the employee the W-2, and I'll get into logistically how our operation works, but at the same time we send out the W-2, we would also send each of our clients a form called the Schedule H. The Schedule H is a unique tax form that goes on your own personal income tax return, and it reflects the wages that you paid that employee throughout the year. So you can imagine it would be inappropriate if only one person reported all of the payroll as their, because it makes it look like they have 8 times the wages that they actually had. Because it's going on your personal income tax return, each family reports the wages they paid, and that is technically childcare expense. So there are some tax breaks associated with that. But that's, in a nutshell, that's usually like the high level. Each family is a standalone employer. You're responsible for the taxes on the wages you individually pay. So I can imagine, just easy example, if you know each family here is paying $5 an hour, well, the combined wages would be like $40 an hour. So this employee is making well above minimum wage. But you know, part of the advantage of being in this type of arrangement is your individual contribution to the employee's wages can be below minimum wage. That's unique. There's not a lot of other situations where you could get away with paying below minimum wage, except for in this type of co-employment where we know that there's combined wages that make this above minimum wage. So that's one of the unique things about this. But with that all being said, our service HomePay is very comprehensive. We've been doing this since the early 90s, just this type of payroll management for household employers. So if you were to want to get started with us, I think the best way to do it would be send me the employee's name and email address, and we can, HomePay, we do a DocuSign process where I can send this employee her W-4, her direct deposit authorization form, where she can fill out this information electronically, very secure through DocuSign, send it back to us, and then I can take that info and, with her permission, set each one of these families up with payroll. We'd have to each do an individual registration, and my job is to make that all super easy. You've got a lot of tricks to make that really easy, but ultimately, once we submit your registration, then our setups team will go and set you up as an employer. So each individual household employer gets a federal employer ID number, a state unemployment insurance tax ID number, and we set all of this up. You don't have to do any of this. We also file a new hire report. These are just different steps required, and we set up your HomePay account. That all happens within 1 business day of submitting the registration. So it's very, very quick for us to get this going. The online account that we set up for you is really how you'll be able to use the service for the most part. It has a main screen called a payroll manager tool. It's kind of it's like a dashboard, and there's different things off the dashboard, but the main piece is this payroll manager tool. It'll be preset to whatever's appropriate for each family for like the number of hours that this employee is working. If you have multiple employees, you can have different employees, and we can also have different rates. So usually in like nanny shares, we might have different rates depending on if she's working for more than one family, or kind of, so if the nature of the work is different depending on the day, you can select different rates. It's one of those unique things about this as well. But for the most part, we'll have this tool set up, preset with whatever is the standard for the employee for that week. And if the employee works her standard schedule every week, you don't have to log in and make a change. It's already going to be preset. But if you needed to change the hours that she worked, if she called in sick one day or worked more last hours or something, you can change the number of hours in our system. It instantly recalculates for you. So the point is, whatever's in there for the number of hours, you'll immediately be able to see on the screen her gross pay, her tax deductions, and her net take-home pay. The net pay is typically,
Chad, are you able to do a screen share to show us what your platform looks like? Or
I don't really have a good method to do something like that. Again, this is usually like a phone consultation, and we don't have like a demo, but it's brand new. It's mobile friendly, and it's like easy to use online. I wish I had some like current screenshots or something, but it's just not something. So unfortunately, I have to use your imagination. But it is, I promise, super, super easy to use, and we've got a really good reputation for it being like quite seamless. So with that being said, I wanted to point out basically how the money gets transferred to the employee each week. Any other questions at this point? Though it seems like it might be a good stopping point, because I know I'm kind of blowing through a lot of info. Is there any other questions that came up?
Dashboard, can we see that on your website if we log in there?
No, there's not current. It's actually, the online account has recently been updated. And so historically, I would have been able to say, yep, we've got some screenshots on the website, but I don't have anything right now. I could probably get some, I'm quite sure. And so since that's interesting to you guys, I'm happy to put together a follow-up email with some screenshots of the current account and like what it looks like. It's basically like the employee's name, and then the fields with it has the number of hours, and it's like a toggle where you can kind of change the number of hours, and it would instantly recalculate everything. Sorry, I don't have a better demo or something like that. Like I said, this is a little bit unusual to have like a Zoom meeting to do these types of consultations. So I'm prepared in that sense.
That's totally fine. Does anyone else have any questions up to this point? Brittany, do you?
My question is, if we toggle on it, is it set, the wage set based on the number of people? Let's say like midway through, the number of families changes. Let's say someone gets added to the pod. How does that work?
Typically, you'll want to notify our team, and they can change the rate for you. So I've seen a couple of these already, people set up with 5 families and then a 6th family joined. And everybody went from paying, excuse me, I'm sorry. Everyone went from paying 1/5 to 1/6, right? And so they just let our team know. Our team knows each account that's in the nanny share. And if we get authorization from the different families, we just switch that to whatever's appropriate as we're adding the new family to the pod.
Awesome. Great. Thanks.
One thing that I think it makes sense to just bring up right now is where we really shine is our client service. And you don't have to take my word for it. I'd highly encourage you to each Google our service, HomePay. The first thing that comes up is the Google reviews. It's like on the right there. It's easy to see. 5 stars, hundreds of recent reviews. Everybody's saying the same thing. We're well worth it. Our client service is awesome. We make this super easy. And so I really think that goes a long way for me as far as just being able to talk about the service. You don't have to take my word for it. It's just The reviews are there, and everybody talks about how easy we make it, but in particular, how good our client service is. So in these weird things, like this is a complicated arrangement, right? Co-employment with 8 employees or with 8 employers. There's a lot of just random things that can come up. And when that happens, you can call our service and get someone really good on the phone every time. And that person will just make it happen, whatever the issue is. So anybody who's worked for a business before knows that sooner or later something weird with payroll can happen. And that's where we really shine. But our service itself has it very streamlined. So the next part I'm going to get into, I think, is the trickiest part of the content. I'll try to be concise about this, but New York requires weekly pay. So we'll have to set it up with like a weekly pay frequency. Every week, what happens is the employee works her schedule, maybe like Monday through Friday, for example. When she's done working on Friday, you'll each have all weekend to be able to go into your HomePay account and change the number of hours if necessary. If you don't need to make a change, if she worked her standard schedule, it's already preset. But if you need to make a modification, you can log in over the weekend after the work was performed, change the number of hours, and it would instantly recalculate everything. And then basically that Tuesday afternoon, so after the weekend's over, you have all day Monday, and then Tuesday afternoon, we would debit your bank account for the employee's take-home pay and transfer that money, and it would hit her bank account on Friday. So she would get 8 different pay transactions. And she would actually get emailed with 8 different pay. Well, she would have her own online portal, and she'd be able to log into her portal, and she'd have 8 different pay stubs from her different employers for that pay period. I know it seems weird, but that's the way it does. That's the way the IRS sees this. It ultimately is because it's household employment. So she has 8 employers. She gets the 8 different transactions, and that's how it works. So again, this is the trickiest part to understanding this. Every week when she gets paid, it's only her net pay that's going to go from your bank account to hers. The taxes that we're withholding from her, it's approximately 20% of her pay, that's just going to stay in your bank account because it's not due to be sent into the government until the end of the calendar quarter. So, like for example, we're in August, you're going to start her in September. That September is the tail end of quarter 3. Quarter 3 is July, August, and September. So we're going to manage payroll for September. And after September's over, in mid-October is when quarter 3 taxes are due. So in mid-October, we'll email each of you and we'll say, okay, quarter 3 is over. This is how much taxes accrued for you with this employee. And this is when we're collecting. Because we don't want to catch you off guard by this, but we collect all of the taxes in one lump sum at the end of the quarter. So week to week, she gets her take-home pay. The taxes are accounted for in your bank account. And then at the end of the quarter, we debit all of these necessary taxes from your bank account. We send them into the government, federal and state, employer and employee portions. They all get remitted. We guarantee they're on time and accurate. And that's how each quarter closes out. And after the quarter is closed, then we charge you for each month that we managed within the quarter. And it's $59 per month. And that's the special price we have for this like nanny share arrangement. So for quarter 3, for example, you only need us for September. So you'll be charged $59 in mid-October. And then we're going to manage quarter 4, which is October, November, December. We'll charge you for that work in mid-January when we file quarter 4. Okay, so that's pretty much how it works. We bill after the quarter is filed, and you're not locked in any way. If you ever need to close down service, you just let us know. We'll close things down. We don't charge you for any extra work that doesn't need to be done. But there's one last piece. At the end of January, we send the employee a W-2. I already mentioned she's going to get 8 W-2s in theory. We're also going to send each family a Schedule H, which is a tax form that's going to go on your income tax return. When we do this year-end packet of forms, we charge a standalone year-end fee of $100. And that's it. That's really how it works. So to recap, super concise, we get you all set up. We set up your tax ID numbers as the employer. We manage payroll. It's got to be weekly. We do her direct deposit every week. She gets her pay stubs. We keep track of all the taxes. At the end of the quarter, we let you know before we do this, but we debit all the taxes from your bank account, send them into the government. And then lastly, at the end of the year, we send you a Schedule H that goes on your income tax return. And that's basically how this works. And we make it really seamless. Once this is all set up, you just tell us if there's hours that change and we do everything else. And that is like the basic spiel as far as like what our service does, how payroll works. Now, knowing that you're in this situation in New York, There's other things to keep in mind. One thing I actually, as I was talking, I don't know that I have a clear sense of this. Do you know how many hours per week this employee is going to be working for the pod? Do you have a good sense of that? Are we thinking it's going to be more than 40? That's kind of the main thing I'm trying to get a sense of.
Oh, sorry. Hi. We think it's about 8:30 to 3:30. Is that right?
Okay. So we might be shy of 40 hours a week. Here's a very important.
5 is 35 hours a week.
Okay. So you're just shy of 40 hours a week. Here's a very important detail. And again, I wish that some of these things logistically could be different, but New York is very picky about this. And so I don't want to neglect to say this. If the employee works 40 hours a week or more, you must have workers' compensation insurance and state disability insurance. State's very picky about that. Even if it's 1 week that she worked 40 hours, you have to get this insurance set up. The state says, each family that has the 40 hours, if you're going to report 40 hours as an individual employer, doesn't matter what the other pods are doing. If you are reporting 40 hours, you need to have workers' compensation insurance. This is not our rules. This is the state of New York.
If it's 40 hours or more, is it
40? If she was working 39 hours, not a requirement. 40 hours, it becomes that's the hard mark.
9 hours, which is, we're going to be under that.
Yeah.
Don't need workers' comp?
No, not a legal requirement. So it's worth thinking about this. I talk about this every day, and I don't want to not mention, some of our insight into this. Workers' compensation insurance it's a protection. If she were injured while she's working for you, you could, as her employer, be liable for medical bills and lost wages. Workers' comp protects you from that. So if she's injured while she's on the job, workers' comp is going to cover any medical bills and lost wages. To put it one way, to put it kind of bluntly, but I think is perspective, she wouldn't really be able to sue you if she was injured while she's on the job. Workers' comp would protect from that kind of situation. So it's good protection.
Yeah.
A lot of states say you have to have it. New York says you have to have it if they work 40 hours a week or more.
Workers' comp is relatively cheap too.
It's about $1,000 a year in the state of New York. Can vary on a couple variables, but generally speaking, it's the New York State Insurance Fund, and it's like pretty much close to $1,000 a year in this situation. So
I think we should all pretty much agree that we need to do that.
And she's gonna, even if her schedule is 8:30 to 4:30, she's gonna have prep time after, I
think it's less even about the 40 hours than it is
Yeah.
about the liability.
Yeah.
I mean, she might have weeks where she does, but we're not also doing a timestamp tool for clocking in, clocking out. So record keeping would be less of an issue, but I think the liability is worth $1,000 divided X ways.
Yeah, Greg and I
let me jump in. Sorry, real quick, just so this is clear. It's not like the whole pod could set up workers' comp and it's like $1,000 and it just covers everybody. It's each individual family is an individual employer, and so you're technically each supposed to have workers' comp.
Well, that's different.
I know, isn't that such a drag? It's not my rule. If I had any thoughts on a way around that, but this is a New York thing. I've personally seen people who come to us and they've had an employee. Yeah, go ahead.
if we wanted to get the workers' comp, but another family didn't, that's fine.
That would protect you as the individual family. I think historically our guidance is always like it's better for each family to get it, but that it's a little bit ambiguous sometimes. I do have a partner that is a workers' comp specialist that I'm happy to make sure that you guys have his info. You can bounce some ideas off him. But I know our classic advice is each family should have it in order to protect. I know if I was doing this, I have enough insight to say if I was in New York and if I was doing this, I wouldn't not join the pod if one of the or two of the other families didn't do workers' comp, but I know for sure I would personally do workers' comp. So to put it like that, I know that would protect.
You break it down.
I have a quick question.
Break it down.
The premise is that she's an employee of the pod, and is that a New York thing, or what happens if the premise is that she's an independent contractor of the pod?
So you're right. Well, let's take a step back. The pod is like a theoretical kind of term that's come up recently, and I love it, but it's not like anybody's going to see the pod as the employer. Each family is an employer. And so there is, as far as like an entity that is like the learning pod, that's not really a thing as far as the Department of Labor or the IRS sees it. They're going to see each family as a standalone employer.
Okay.
Even if it's hired through an LLC?
But that's fine. That's fine, but why can't we employ her as an independent contractor and send her a 1099 versus a W-2, and then you don't have to worry about all the insurances?
Yeah, absolutely. This question comes up a lot. For one, with these types of learning pods, it's possible she could be considered an independent contractor. A lot of this has to do with who controls the work, in particular, who sets the curriculum. If she's allowed to set her own curriculum and she's allowed to set her own hours in particular, kind of tell you like, okay, I'm going to bring this curriculum and I'm going to come at this time. If she has that kind of control over the work, it's arguable that you could say that she's an independent contractor. But most of the time, that's not the case. Usually you're setting the hours, you're kind of telling her how much you're going to pay her. She's not like telling you what she's billing you. You're like negotiating wages. There's a lot of things that make this different than an independent contractor. Here's a really good example of an independent contractor that works for a household. To me, this gives really good perspective. Plumber. If you hired a plumber to come do some work for your home, that's an independent contractor. They would come, they'd bring their own tools. They might even send an assistant. They might not come themselves. There's all these things that it's different. And then ultimately, when they're done with their work, you as a household would not give that individual a 1099. Households don't give out 1099s. Businesses do. So that makes sense in a business context, but a household would pay the independent contractor's invoice, and that's it. And then that would be that. And then the independent contractor would give you a receipt. So if you did decide that this tutor is truly in business for herself, she's all these markers, you can Google this and you'll probably find that it probably is not going to meet this criteria. But if you Google it and if you're looking around, if we talk about it, you're thinking, you know what, I think she is an independent contractor, then ultimately you're not going to give her a 1099. You're just going to pay her invoice, basically. So that would be kind of that route. Okay. Good question. I would think the same thing.
I want to chime in quickly too.
Sure.
If you go the independent contractor route, I can tell you the New York law, there's almost no way that she qualifies as an independent contractor. But even if you were there, let me tell you what you have to do to prove you're right. You name her as an independent contractor. The government then calls you up and says you're an employee. And then you have to fight that battle. And you can now hire a lawyer for $10,000 or $20,000, which is about 20 times what the workers' comp would have cost. And in about 3 years, you'll be done with that fight.
Yeah.
So it's just such it gets so sticky that it's sexy and it feels easy to say because independent contractor rolls off our tongue.
But it also makes it for you don't have to do anything. So it'd be pretty sweet if it was an independent contractor because you then don't have any of these tax requirements. Everything I'm talking about, you wouldn't have to do with an independent contractor. Unfortunately, I completely agree with you. There's no way the state or the IRS is gonna say this is an independent contractor, even though it's a little bit more gray than if this was a classic nanny. Because it's a tutor, it's possible, but I don't think it's likely at all.
I've as a quick war story, I've been there before where I hired somebody for 2 days a week that never came to my office, never used my equipment, and they said she was an employee. It didn't even occur to me that somebody would consider her an employee.
Yeah.
By the time I started getting all these notices because I was gearing up to fight them, I realized it is not worth my time and money to go into this.
Yeah.
So even when they're wrong, they get you because you're going to pay them just to go away.
That's right. New York in particular is kind of notorious for this. New York and California both. Yeah. So really good questions. Obviously, this is not the first time I've talked about that. So you're totally on the right track thinking through this. But yeah, unfortunately, not able to do the independent contractor. I'm trying to think of other things that would be really important for you. Oh, you know what's funny? In this situation, I don't want to get into the weeds, but I just want to prime you for some things that might come up that are kind of weird. Overtime. So let's say you do get the workers' comp because, you just want to be safe. I think that's the best idea. Regardless, if she works more than 40 hours a week, you have to pay overtime. So just be aware, this is kind of funny in this situation. Overtime, the rule is she has to get paid 1.5 times her average hourly rate. So if she has multiple hourly rates, then what we need to do in weeks that she has overtime is we have to do a special calculation to actually calculate what her appropriate overtime rate is in that scenario. So be aware, it gets a little bit confusing. Our team is very familiar with navigating that, but overtime is very important to get right in this type of situation.
I have a couple more questions, I guess, because depending on how the year goes. Well, first of all, unemployment insurance. That's
Yes.
that's going to be another. It's going to be another expense, right? I don't know how much that runs or what you have to or does your program calculate that for us automatically?
We do. Let me quickly put this out there like this. So we're going to handle all of the taxes on the wages you pay the employee. Let's say, for a quick example, you're just going to pay the employee a flat $100. Well, I mentioned earlier, we're going to withhold about 20% from her pay. So in this example, she would net 80, something like that. What we're withholding from her is going to be Social Security, Medicare, state income tax, and federal income tax. And in New York, there's like another small one. It's like a family medical leave, I think. It's tiny. But we would withhold all that, and it's about 20% of her pay. So in addition to what we're withholding from her, you as the employer have to pay tax that's on top of the gross. And this is to your point. The employer has to pay a matching contribution to Social Security and Medicare. You also have to pay state and federal unemployment insurance. Our service, HomePay, we're going to account for and administer all of that. It's guaranteed to be handled correctly. But just for budgeting, think about it. Whatever you end up offering this employee, you're going to need to budget for 10% on top. The employer's portion of tax is usually pretty much spot on, very close to 10% on top of the gross pay. So if you offer her $100, taxes on top of that means $110 is your all-in cost. Okay.
So one last question: If by some by some fortunate set of events or circumstances, we go back to school full time in January, I assume, if it's, for example, an employee at will, and then she's terminated then at that point, and she'll collect her unemployment as a contract allowed starting then, and that's fine. And then, but if she continues on as a tutor or something, then it moves more to independent contract mode going from there, or that's up to us, however we decide to set that up.
I don't know that it's going to be an independent contractor, even if she's a tutor. I just don't know that it bears a lot of markings as like an independent contractor. It's possible, yeah, it's just she's not. Yeah.
Yeah, I'm wondering if it would turn into an independent contractor just because we wouldn't be setting the curriculum then. She would be going off of her knowledge of what third graders are supposed to be learning. It wouldn't be like, our public school defining the curriculum.
And it wouldn't be in the same construct either.
Yeah, we would probably be paying her or having her work hours that were convenient for her, like nights and weekends or something like that.
It might fall under 20 hours a week too, but I don't know if that's the threshold or anything like that. It could be a 10 to 15 hour work week for her.
I see what you're thinking through. I think there's absolutely a case to be made that it could be an independent contractor. I personally haven't actually seen anything like that play out to where I could say, yep, I have experience with this. I do it like this. So I'm not sure. Certainly if that were to come up and like whenever you're closing down HomePay, let's say this scenario happens, you could talk to our client service team and give them the exact scenario, the plan that's going to happen, and they could give you some really straightforward guidance at that point. I can tell you there is a definitive way to get an answer on this. There's a form called the SS-8. It's an IRS form or one of those entities, and it's basically a way where you can fill out some info about this arrangement, what the work is like. There's a couple different details that they'll take. It's like qualitative data. You send it in, and then it takes them a little while, but they will actually make a determination and send that determination back to you and tell you whether this is an employee or an independent contractor. I think if I were navigating this and I was a little bit ambiguous about it, the New York, if you were in Alabama or some other state that doesn't have as many domestic workers rules, maybe it's not worth being so by the book, but New York has made it very clear that they're serious about how you do domestic workers. So I think that I would probably default to consider the employee like a W-2 employee until I had an authoritative body that told me that this is a independent contractor, and that ultimately would be the SS8. So if like you're navigating this and it looks like school's going to open up in January, and you're thinking, okay, we're going to do this, maybe fill out the SS8 and send it in to actually get a formal determination on that. That would be my best like professional advice, I guess.
Good question. Chad, can you touch on the FSAs?
Oh, yeah, definitely. I love talking about FSAs. This is one of my favorite things to get into because a lot of people are familiar with it, but I know a ton of details about this, and it tends to work out really well. So, dependent care flexible spending account. This is a type of fringe benefit that a lot of employers offer. Probably, I mean, if there's 8 people on this pod, I'd say it's very likely 6 out of 8 probably have access to a dependent care flexible spending account. What it is it's part of like a cafeteria plan. When you get to sign up for benefits from your employer, you get to sign up for maybe a health savings account, maybe a dependent care flexible. They offer these different things that you can sign up for. So the dependent care flexible spending account is one of those things. You can max it out to $5,000 a year. So you might have seen it before during open enrollment. A lot of people see it, don't quite know how it works. I know I didn't really know how it works until I got this job. Basically, you have your employer, you set this up where they start taking money out of your paycheck where they don't tax you on it. Throughout the year, that will accrue. They set this money aside, and it maxes out at $5,000 a year. And the way it works is when you show your employer proof of childcare expense, they can give you this FSA money that they never taxed you on. So it's a little bit backwards how you get it, but this benefit lowers your taxable income by $5,000 a year. In this situation, you're hiring this person who's doing this work for you. It is qualified childcare expense. So the FSA will count for this. And so here's the thing. If you didn't sign up for your FSA for the year 2020, when you hire this person, you will have a qualifying event to enroll in that dependent care flexible spending account. A lot of people don't know this. I really get on this detail many times a day because a lot of people don't know it saves a lot of money. If you miss this opportunity to enroll in this benefit, then you're potentially leaving up to $2,000 on the table, because by not paying taxes on $5,000 of your own income, the savings for that is generally about $2,000. It's a very good tax break. You have a window of time to enroll in this benefit because you're having a change in childcare expense when you hire this person. So that's the FSA. We generate FSA reimbursement forms. So if you do use our service, we'll generate exactly what you need to make it seamless to use it. I know it seems kind of detailed, but the point of this whole FSA talk is check with your employer. If you haven't signed up for your FSA, you have a window now to do that, and that'll be your best tax break for us, and it plugs in really easily with us. Okay.
Hey, Chad, quick question.
Sure.
If my employer has this as a perk and my husband's employer has this as a perk, can we both get the $5,000, or it's just one?
Just $5,000 per family, unfortunately.
Per family. Okay, yeah. That's what I kind of thought.
I'm thinking, I've seen some news articles recently that there's a lot of talk from both sides of the aisle, the political aisle, of changing that and increasing tax breaks for childcare expenses so I'm hoping in the next couple of years, because these tax breaks have not gone up for decades, and it's ridiculous. And a lot of people are really frustrated because there's not enough tax breaks for childcare expense. But that being said, to answer your question, a little bit of high horse there. No, it's only $5,000 per family. Awesome questions. Keep them coming, guys. I don't mind at all. Any other thoughts? I think we went over a lot of the good stuff. Let me recap what I think is big, high level takeaways. 1, budget for 10% on top of the employee's gross pay. Whatever you end up offering her as an individual, like if you're offering her $6 an hour, you budget for $6.60 an hour, right? 10% on top of the gross. That's a pretty easy number to remember, and that's actually the way this all plays out. It's pretty accurate. 2, workers' compensation insurance, about $1,000 a year. I wouldn't skip that. 3, our service all in, we charge $59 a month and $100 at year end. And we have a service guarantee. It says it right on the front page of our website that if you use us and if you don't think that we're fully comprehensive enough, we'll refund you up to 6 months worth of service fees. I think that's pretty cool. I harp on that all the time. But
And it's
that's my
$59 per family.
$59 per family. Yeah, that's right.
And then the $100 for the W-2, right? Annual.
Sorry, I wanted to make sure I was highlighting what the fees are. Yes, $59 a month and then $100 at year end. That's per family. That's all. Also, if you have an additional employee, so it's possible you have an additional employee. I think it's more likely $21, an extra $21 per month, but traditionally it's $28 a month. So I'm going to tell you, I think $28 a month, but possibly less for additional employees. So $59 a month for one employee, add a second employee on, that's going to be adding another $28 that month, possibly less. But I don't want to overcoach you. So
it's $800, $808
a year. If you're trying to annualize it, yeah, pretty much something close to that. That's right.
Well, because we're gonna need.
I see where you're going with that. Trying to think. I think that's a lot of the big picture stuff. I am very easy to get in touch with. I don't know if Laura has shared my email, but it's Chad.Hall at myhomepay.com. And you can call me, you can email me. I get back to you very quickly. There's a whole team of us here that try to make this really clear. And ultimately, you want to use this, make it very easy, but these consultations are necessary. Everybody who's doing this has a lot to wrap their head around. I sympathize. I don't have a school age kid, I have a toddler, but I mean, I definitely know I would be scrambling to kind of figure something out a lot like this. So I'm happy to be a resource if any other questions come up down the road.
Thank you.
What is
Great.
Super informative.
You did a great
Thanks,
job.
Chad.
Yeah.
Well, thank you very much, guys.
Thank
I don't
you.
want to take up any more time. I know you're going to continue at least a little bit here. So I'll sign off unless there's any other questions.
Oh, you answered a lot. Thank you.
Cool. All right. Well, I'm looking forward to working with you guys. I'll be standing by for next steps. Thanks so much. Bye, Laura.
Thanks, Chad.
Night.